Hello everyone. So in this video we are going to discuss September 2024 CA Inter ICAI exam paper advanced accounting subject. So total advanced accounting subject contains two parts. Part 1 MCQs and the part 2 is descriptive part. Okay. So MCQs is for 30 marks and for balance descriptive part is for 70 marks. Okay. So without wasting much time, let's get into the topic. Case scenario 1. Mr. Vikram took a loan of rupees 6 lakhs with a carrying interest rate at 10% per annum, and the date of loan is 1st August 23. So date of loan is 1st August 23, and the purpose of loan is to purchase the raw material. So he purchased 4,000 units of raw material at 125 per unit. So for 4,000 units he spent for each unit 125. That means total cost spent for purchase of raw material is 4,000 into 125, that is around 5 lakhs. But total loan taken was 6 lakhs, but out of that 6 lakhs he spent amount to purchase the raw material is 5 lakhs. So balance remained like cash is 1 lakh. Next, the replacement cost of the raw material. That means if you want to sell the raw material, how much amount that we can get from the selling of raw material is rupees 100 per unit. Now we spend 125 to purchase raw material, and if you want to sell the same raw material to the customer or outsider, you will fetch 100 rupees. And labor charges and variable overhead incurred or 1 lakh to produce 1000 units of finished good. So they have given other information, that is to produce a finished good incurred labor and variable overhead that is around 1 lakh. So all these are given information. Okay. Next, 1000 units of finished goods are produced with the raw material. So they use raw material as an input to produce finished good. For every unit of finished good produced, 2 units of raw materials are required. That means here entity produced, Mr. Vikram produced 1000 units of finished good, right? So to manufacture 1000 units of finished good, we need 2000 units of raw material. That means amount spent to produce 1000 units of finished good also contains raw material 1000 units. Each unit contains 2 units of raw material, and each unit raw material cost is 125. That means raw material used to produce finished good is 1000 into 2 into 125, that is around 2,50,000. Okay. Next, the net realizable value of the finished good is 300. So NRV of the finished good they have given NRV as 300 rupees. Okay. Next, all the finished goods produced are lying in the stock as on 31st March 24. So whatever the finished good produced by Mr. Vikram, entire finished goods of 1000 units were in closing stock, which cost around 3,50,000. Now if you observe, for 1000 units he spent almost 3,50,000 rupees, right? Now tell me cost per unit. 3,50,000 divided by 1000. So cost per finished unit is 350 rupees. And in the question they have given NRV of the finished good as 300. Okay. Next, my raw material cost per unit is 125 and raw material replacement price is 100 rupees. Clear? So raw material replacement price and raw material cost price. Next, there is no opening stock of raw material in the finished good. Mr. Vikram used 1500 units. One total 4000 units of raw material purchased by Mr. Vikram, and out of that 4000 units he utilized 2000 units to convert that raw material into finished unit, and the balance raw material is 2000 units. And on the balance raw material units, from those balance raw material units of units 2000, he utilized 1500 units to construct an asset, and that asset is qualifying asset. So if that is qualifying asset, then the next question will be raised to the student is we need to capitalize the borrowing cost, right? Because this raw material used from the amount which is raised from bank loan, like loan, right? So, and labor and other overhead charges incurred to construct of asset are 90,000. So for construction of a qualifying asset, he used 1500 units. That means 1500 into 125. So 1500 into 125, 1,87,500 raw material cost to construct an asset, plus labor and other overhead for construction he incurred 90,000 rupees. At the same time, Mr. Vikram also paid 15,000 to install the asset at factory premises. So installation charges also considered the cost of asset, right? So add installation charges 15,000. Next. So till date total cost is till now 1,85,000, 87,500 plus 90,000 plus 15,000, right? So 2,92,500. So 1,87,500 plus 90,000 plus 15,000. That is 2,92,500. Till now cost of self-constructed asset. Next. Mr. Vikram used a balance of loan proceeds of rupees 1 lakh. Like initially we raised a loan 6 lakhs, right? Out of that 6 lakhs, we utilized 5 lakhs to purchase raw material. So balance left over 1 lakh. Mr. Vikram invested in the equity shares of P Limited. So there we should use the provision AS 13. He purchased 9,000 equity shares. He purchased 9,000 equity shares, which is having face value 10 for rupees 1 lakh. Now, if you observe, 9,000 shares of rupees 10 is nothing but equity share capital face value is only 90,000, but we incurred a cost 1 lakh rupees. So cost of investment is 1 lakh rupees. And this investment is purchased on 25th March 24. So just before 6 days of the year end. Now, the P Limited declared and paid dividend. So that means the company in which we purchased shares, that company declared dividend 20% on 30th March for a previous year 23-24. That means this is the dividend which we should account as per AS 13 as a pre-acquisition dividend, because we are not a holder of the shares for entire full year, but we got dividend 20% on full shares, right? So tell me amount of dividend to be received from the company. So total 9,000 shares, each share face value 10, 90,000 into 20%, that is around 18,000. Now what will be the accounting treatment of this 18,000 as per AS 13? If the dividend received from the company is a pre-acquisition, it should be reduced from the cost of investment, right? So cost of investment 1 lakh. From that 1 lakh, we should deduct this 18,000, so that you will get 82,000 as a net carrying amount of the investment, right? So this is the entire case study. Now coming to the questions part. What would be the value of closing stock? Well, these are the answers selected by the student. Now we are discussing a correct answers. That marked answer may be correct or wrong. We don't know, right? Now we should select the correct answer by solving the question, right? Now, what would be the value of closing stock of raw material X and finished good? Now, as per the provisions of AS2, raw material valuation is depends upon the finished good selling price. If the finished good selling price is more than or equal to cost, then raw material should always be valued at cost, right? And if the finished good selling price is less than cost, raw material should be valued at cost or replacement price, whichever is lower. So unfortunately, in the given case, based on the case, cost per unit of finished good is 350. But if you observe, NRV of the finished good is 300. That means here the finished good is selling at a price which is lower than cost. In such a case, we should always compare cost and replacement price, whichever is lower, right? So raw material shall be valued at cost 125 per unit or replacement price 100 per unit, whichever is lower. That means here we should consider 100 rupees per raw material. 100 rupees per raw material. Now the question is, number of units of raw material which are held in the closing stock. Initially we purchased 4,000 units, right? And out of 4,000 units, we already utilized 2,000 units to produce finished good. Balance left over 2,000. And out of that 2,000, again we used 1,500 units to manufacture a self-constructed asset. Now tell me, balance inventory held in the closing stock is 500. Now for that 500, we have to apply the rule as per AS2. Either cost or replacement price, whichever is lower, that is 100. So 500 into 100, that comes to 50,000. So 50,000 is the value of raw material which is in the closing stock. Now coming to finished good. So total finished good manufactured by the Mr. Vikram is 2,000 units. And finished good valuation as per AS2 cost or NRV, whichever is lower. Cost per unit is 350, NRV per unit is 300. So 200 into 300, that comes to 6 lakhs. So finished good valuation is 6 lakhs. Sorry, total manufactured finished goods are 1000, right? Yes. So 1000 into 300, 3 lakhs. 1000 into 300, 3 lakhs. So 3 lakhs is a value of finished good. 50,000 is value of raw material. Now verify the answers. So closing stock raw material is 50,000 and closing stock of finished good is 3 lakh 50. Here we got 50,000 and 3 lakhs, right? So option 1 is wrong. And option 2, closing stock raw material X is 50,000 and the closing stock of finished good is 3 lakhs. So the correct answer is option B. Done. So that is about first MCQ. Next, for the same case, second MCQ. Cost of self-constructed asset as per AS10 will be. So here we should consider cost of self-constructed as per AS10. So as per AS10, if it is self-constructed asset, we should consider purchase price and all directly attributable expenses to construct the asset and that to bring the asset into ready to use condition. And in addition to that, in the given case, the asset is a qualifying asset. So in case of a qualifying asset, we should also capitalize the borrowing cost to the extent amount used for construction, right? So we got already 2,92,000 cost. That is before adding interest cost, right? Borrowing cost. Now to that 2,92,500, we should capitalize the interest cost. Now the question is, sir, actual amount used for construction, that is from the borrowing, is how much, sir? So we used around 1500 units of raw material, right? And each unit we spent around 125. So 1500 into 125, that is around 1,85,000. So we spent 1,87,500 rupees for constructing the asset, and that is a loan. And on that loan, there is an interest rate charged by the loan provider is 10%. So 10% per annum. And the loan was taken on 1st August. Now the year end is 31st March. Now 1st August to 31st March. August, September, October, November, December, January, February, March. It is around 8 months. So into 8 divided by 12. So 1500 into 125 into 10% into 8 divided by 12. So that is 12,500. So this 12,500 should be capitalized at the cost of asset. 2,92,500 plus 12,500. Now the answer is 3,05,000. So 3,05,000. The correct option is option C. Okay, done. Next, come into third MCQ. As per AS16, what will be the amount of interest to be capitalized and amount of interest to be charged to profit and loss? And we already solved in the second MCQ that amount of interest to be capitalized is 12,500. So in the given answer, option C and option D got eliminated. Now we should verify option A and B. So first of all, in order to answer this MCQ, first we should identify total amount of interest charged by the bank loan provider. So total loan, how much? 6 lakhs, right? Now out of 6 lakhs, a 10% rate of interest, that is for 8 months. So 6 lakhs into 10% into 8 divided by 12. So total interest charged by the loan provider is 40,000. And out of this 40,000, 12,500 we should capitalize. Then the balance will be 27,500. This 27,500 shall be charged to P&L because that is not used for a qualifying asset, right? So 27,500 shall be charged to P&L as a interest expense. Now the correct option is option A. Clear? Next, fourth MCQ. What is the carrying amount of investment as on 31st March 2024 as per AS13? Now the carrying amount of the investment at the time of purchasing the investment, we spent rupees 1 lakh, right? And from that 1 lakh, we deducted pre-acquisition dividend of rupees 18,000. The carrying amount become 82,000. So pre-acquisition dividend shall be reduced from the cost of asset so that the carrying amount become 82,000. Now see the answer. What is the carrying amount of the investment as on 31st March 2024 as per AS13 and suggest the treatment of dividend. So treatment of dividend shall be reduced from the cost of investment. So dividend is reduced from the cost of investment. And the carrying amount of the investment as on 31st March 24 is 82,000. The correct option is option D. So that is about case scenario number 1. Next, case scenario 2. K Limited sold goods for rupees 22 lakhs to Mr. Ravi Kumar on 1st February 24. But at the request of the buyer, those goods were delivered on 10th April. Now, here the point is, as per AS9, so whenever the goods delivery delayed at the request of the buyer, we should consider risk and reward already transferred at the time of invoice. Here the sold goods by K Limited to Mr. Ravi Kumar completed on 1st February itself. That means we should recognize 22 lakhs on 1st February itself. On 1st February. That is before 31st March 2024. Next, K Limited also sold goods rupees 2 lakhs on approval basis. So as per the provisions of AS9, whenever the goods are sold on approval basis to the customer, the sale should be completed only when the following three scenarios: when the goods are formally accepted by the customer, or else when the time period to reject got lapsed, or else when the customer done an act that signifies that he adopting the transaction. That signifies that he adopted the transaction. Now, so out of 2 lakhs on overall basis, that is on 1st January, to Sheetal Enterprises, the period of approval is 3 months, after which they were considered sold. So the time period to accept or reject as per the terms are 3 months. Now buyer sent disapproval 25%. No doubt this 25% is not considered as a sale. And approval for 50%. That means out of this 2 lakhs, 50% got approved. That means rupees 1 lakh. Rupees 1 lakh. So total already 22 lakhs is an income to be recognized before 31st March. And this 1 lakh is also considered as an income before 31st March. Till 31st March. So balance 25%, there is no response. That means the time limit to reject or accept got lapsed. If the time limit to reject or accept has been lapsed, that will be considered as a sale automatically. So for balance 25%, that is 50,000 is also considered as sale. So 22 lakhs and 1 lakh 50,000 total 23 lakh 50,000 is considered as a sale, right? That is before 31st March 24. Now Mr. Ravi Kumar, once go through with the MCQs. What is the amount to be recognized as revenue as per AS9 in the books of K Limited as on 31st March? So till now we already completed 2 paragraphs. Now come to third one. Mr. Ravi Kumar has commenced a legal action against the K Limited for supply of the faulty goods to claim damages. So as a result of delivering the faulty goods to the customer filed a case against the company. The lawyers of K Limited have advised that. So that means our lawyers that it is not remote. That means there is no any less chances for 2 resource may be required to settle the claim. That means there will be some chances for a payable, but there is no any confirmation. Legal cost to be incurred irrespective of the outcome of the case is 45,000. This 45,000 we should definitely incur without the result of without considering the result of the case. Anyhow, we should incur 45,000 cost. So there is confirmed amount. And settlement amount if the claim is required to be paid is 5 lakhs. If the case lost by the company, there should be outflow 5 lakhs. But that 5 lakhs is depends upon the result of outcome. Okay. Now, Sheetal Enterprises, a trade receivable of K Limited, suffered a heavy loss due to an earthquake that occurred on 30th March. So earthquake occurred just before the financial statements date, balance sheet date. And the loss was not covered by any insurance policy. And that signifies that there is a possibility of getting bankruptcy or insolvent of the customer. So as a result, in April 2024, Sheetal Enterprises become bankrupt. That become insolvent, bankrupt. If the customer become insolvent, the amount that company sold on a credit basis will not be recovered by the company, right? So the balance due from Sheetal Enterprise as on 31st March 24 is 75,000. So on the date of balance sheet, we have 75,000 balance to be received from the debtor. K Limited makes provision for doubtful debt 5%. So K Limited already make provision for doubtful debts 5%, that is 3,750. 3,750. This is the information given in the question. Now coming to MCQs. MCQ number 5. What is the amount to be recognized as revenue as per AS9? So as per AS9, revenue recognized will be 23,50,000 as we already discussed earlier. So option A is correct. Now MCQ 6. What will be the treatment of legal cost and claim for legal action concerned by Mr. Ravi Kumar in the books of K Limited as on 31st March 24 as per AS 29? So first thing, the point of legal cost, that should be definitely incurred by the company because the case is ongoing, right? And 45,000 is compulsion, definitely you have to pay. And second one, coming to the legal claim, if the legal claim is in favor of the customer, we have to pay 5 lakhs. In favor of us, we no need to pay. But there is no any confirmation, right? It's a kind of contingent liability. May or may not. May or may not. So 45,000 is compulsion and 5 lakhs is may or may not. If that is may or may not, that will be disclosed as a contingent liability in the financial statements, notes, accounts as per AS 29. So in the given case, provision is 45,000 and the disclosure of contingent liability is 5 lakhs. So option C is correct. Option C is correct. Here 5 lakh 45 is wrong because there is no compulsion of payment regarding that 5 lakhs. And create a provision for 5 lakhs. Actually here we should create a provision of 45,000. This is wrong, this is wrong. And make a disclosure of contingent liability. 5 lakh 45,000 entire amount is not contingent because 45,000 anyhow we should incur, right? So there is a confirmation about that 45,000. That means correct answer is option C. And what is the treatment of insolvency of Sheetal Enterprises in the books of K Limited as on 31st March 24 as per AS4? So as per AS4, AS4 covers the transactions or events which occurred in between balance sheet date and approval date. And a given case, date of approval is not given. But they have mentioned that in the April month itself, customer become insolvent. And already there is a evidence that 31st March entity created a provision because of fire accident occurred to the customer, right? So this bankruptcy provided for additional evidence to the condition which is already existing on the balance sheet date. That means we should consider it as an adjusting event and we should make a provision entire amount of 75,000. So option C and option D got cancelled. And once you observe option B, adjusting, no doubt adjusting event. If it is adjusting event, we should make entire provision, right? So balance due is 75,000. We should make total 75,000 as a provision. So 75,000 should be made in the final account. So option A is correct. Option A is correct. Done. Okay. Next. MCQ 8. So this is separate MCQ. P Limited has 60% voting right in Q Limited. So P Limited has 60% voting right in Q Limited. Q Limited has 20% voting right in R Limited. So Q Limited has 20% voting right in R Limited. P Limited directly enjoys a voting right in R Limited 14%. So 14% direct investment, 20% is indirect investment in R Limited. Now, R Limited is a listed company and regularly supplies goods to P Limited. Okay. The management of R Limited has not disclosed in the relationship with P Limited. So it not yet disclosed the relationship with P Limited. Okay, fine. While preparing the financial statements of P Limited. Now the question is, while preparing the financial statements by the P Limited, which entities would you disclose as a related party with reference to the AS 18? Now the question is, if the opposite company not disclose our company as a related party, that doesn't mean we don't need to disclose. We have to disclose all the related party relationships as per AS 18. So as per AS 18, P Limited has 60% voting right in Q Limited. That means P Limited has control. So Q Limited is a related party. At the same time, P Limited has a significant influence over R Limited because it holds directly relation 14% and indirect way 20%. So 20 plus 14 total 34%. So Q Limited is also, R Limited is also related party to P Limited. So that means P Limited should disclose both the companies as its related parties. So correct option is option C. Clear? Next. MCQ number 9. So MCQ number 9. A machinery was given on 3 years lease by the dealer of the machine for equal annual lease rentals. So as per the agreement, lease rentals will be equal. That is given in the question. To yield 20% profit margin on the cost of the machinery. So cost of the machinery. So what's the dealer expectation is from overall life of the machinery, he wants to earn 20% profit. That is estimated return. The cost of machine is 3 lakhs. If the cost of machine 3 lakhs, if the cost of machine is 3 lakhs, if the cost of machine is 3 lakhs, expected yield is 20%, right? So 3 lakhs into 20%, that is around 60,000. So overall, from the life of the asset, Dealer wants to get 3,60,000. Now the question is, economic life of the asset is 5 years and the estimated output from the machine in 5 years is as follows. But given lease period is only 3 years. Now observe the output basis. Year 1 50,000, year 2 60,000, year 3 40,000, year 4 65, and year 5 is 85,000. Total output from the machine is 50,000 plus 60,000 plus 40,000 plus 85,000 plus 65,000. So total output from the machine is 3 lakh units. Now we give like dealer given this machine for 3 years lease period, for 3 years. So for 3 years lease period, amount to be collected from the lease receivable, lease rentals is, total amount to be received is 3,60,000. That is for 5 years. Now we have given this asset as a lease only for 3 years, right? So 3,60,000 into output for 3 years, how much? 1,50,000. So 1,50,000 divided by total output from the machine is 3 lakhs. So total amount to be received from the lease rentals is 3,60,000 into 1,50,000 divided by 3 lakhs. That is 1,80,000. But this 1,80,000 is the lease rentals for entire lease period. Now what's the question is about? Compute annual lease rent. They have given that equal annual lease rentals. So total lease rental for 3 years is 1,80,000. So equal means divided by 3. So 1,80,000 divided by 3, that is 60,000. So 60,000 is a lease rental, annual lease rental. So that is the correct option. Next, MCQ number 10. A Limited had 1,50,000 shares of common stock outstanding on 1st April. So there was 1,50,000 shares already outstanding. Additional shares 50,000 were issued on 1st November 23 and 32,000 shares were bought back on 1st February 24. Calculate weighted average. So weighted average number of shares, nothing but if the company issued additional shares, that should be added to the existing shares. As we should calculate weighted average, we should consider the time factor. Weighted nothing but time factor, right? So for 50,000 shares, date of issue is 1st November. Year ending is 31st March. So from 1st November to 31st March, November, December, January, February, March. Clear? November, December, January, February and March. So 5 months. So 50,000 into 5 by 12. Next, company bought back 32,000 shares on 1st February. So that should be deducted. So 32,000 shares into date of buyback is 1st February. So February and March. So 2 months time period of 32,000 shall be deducted. So 1,50,000 plus 50,000 into 5 by 12. 50,000 into 5 divided by 12 plus 32,000 into 2 divided by 12 shall be deducted. So a net number of shares are 1,65,500. So 1,65,500 nothing but MCQ option number B. That is correct. The next case scenario 3. J Limited submits the following data extracted from the final accounts as on the 31st March. Equity share capital 5 lakhs. Profit and loss account debit balance 50,000. 9% debentures 2 lakhs. Loan from bank 3 lakhs. Advance given to supplier of goods is 45,000. Provision for tax 14,000. Plant and machinery 4,50,000. Furniture and fixtures 85,000. Investment in Star Limited 1,25,000. 10,000 equity shares of rupees 10 each. Okay. Now observe, investment given amount is 1,25,000, but this 1,25,000 is representing only 10,000 equity shares of rupees 10 each. Sundry data 70,000 and cash and bank 65,500. Now, additional information given by J Limited. On 31st March 23, J Limited decided to reconstruct. So this is about internal reconstruction. The company for which necessary resolution was passed, accordingly it was decided that 9% debentures to be settled in full by issuing 15,000 equity shares of rupees 10 each. Equity shareholders will give up 40%. Nothing but 40% they are giving up of their capital in exchange for allotment of new 11% debentures of rupees 1 lakh. Okay. Next, balance of profit and loss account to be written off. Equity shares issued for rupees 1 lakh. In addition to above, the following information was also presented by J Limited on 1st April 23. Interest received on advance given by supplier 3,000. Okay. Taxation liability settled 14,000. A debtor of 40,000 is insolvent. Only 40% of his dues are recovered from his estate. Dividend is received on investment in Star Limited, rupees 1 per equity share invested. So for every share, he got 1 rupee as a dividend. And the part of plant and machinery was sold at a loss of 3,000, whose book value is 15,000. That means sale proceeds is 12,000. Now, based on the information given in above case scenario, answer the following questions. Amount of cash flow from operating activity. So here it is about calculation of cash flow from operating activity. So all these 4 points covers internal reconstruction. So now in order to calculate cash flow from operating activity, we have to put focus on these 5 points. So first one, interest is received on advance given to supplier. Now the question, most of the students make a mistake about interest received. Whenever interest received, they thought like interest received is a income from the investment. They feel like interest received is a investing activity. Now here the point is, interest received is from which person, like whom? That is from supplier. Any amount received from the supplier is considered as a operating activity. So your interest received of rupees 3,000 is from operating activity, and that is plus. Next, taxation liability settled 14,000. So income tax paid. If there is no any specific information, we should always consider tax paid as a operating. So operating activity 14,000 outflow. And next, debtor 40,000 is insolvent, only 40% from his dues received from his estate. So 40,000 into 40%, 16,000, that is an inflow. Point C, that is also operating activity. Dividend is received from investment, 1 per equity share invested, that is an investing activity, that is not operating. And part of plant and machinery sold, that is also investing activity, right? So only these 3 items covered under operating activity. So 16,000 plus 3,000, 19,000 minus 14,000. So cash flow from operating activity is only 5,000. So correct option is B, 5,000. And next, amount of cash flow from investing activity. So investing activity, we received dividend 1 per equity share, right? So 1 per equity share means total number of shares 10,000. So 10,000 equity shares, 1 share per equity share. So that is 10,000 rupees. So 10,000 rupees, that is dividend received investing activity. And next, plant and machinery sold for rupees 12,000. Book value 15,000. Loss on sale is 3,000. That means sale proceeds is only 12,000, right? So 10,000 plus 12,000, total 22,000. So this 22,000 is the sale proceeds and dividend received. So that is the investing activity. Correct option is option D. Now, what is the amount of closing cash and cash equivalents as on 1st April 23? What is the amount of cash and cash equivalent as on 1st April 23? So first, for that we should prepare cash account. So without preparing T-shaped ledger, just we should prepare a statement like plus minus. Existing cash and bank balance 65,500. Next, and in point A, nowhere there is any payment or receipt. And in point B, no payment receipt. And in point C, no payment receipt. Point D, company issued equity shares rupees 1 lakh, right? So there is an inflow of cash. So 1 lakh inflow of cash, total it become 1,65,500. And here 3,000 inflow, 16,000 inflow, plus 3,000, plus 16,000. And there is an outflow of 14,000 payment of tax liability. And dividend received 10,000. And sale proceeds of plant and machinery, that is 12,000. So total amount of cash and cash equivalents by the end 65,500 plus 1 lakh plus 3,000 plus 16,000 minus 14,000 plus 10,000 plus 12,000, that is 1,92,500, right? So 1,92,500 is the correct option, that is option A. Next, what is the balance of equity share capital after internal reconstruction? So here we should consider only equity share capital related transactions. So present equity share capital, how much? 5 lakhs. Present equity share capital 5 lakhs. Okay. Now at point B, in point B, equity shareholders will give up 40% of their capital. So out of that 5 lakhs, 40% was given up by the equity shareholders. So that means there is a reduction of equity share capital by 2 lakh rupees. Reduction of equity share capital by 2 lakh rupees. And my point A, 9% debentures to be settled in full by issuing them 15,000 equity shares of rupees 10 each. So 15,000 into 10 is also fresh equity capital. So 1,50,000 is a fresh equity capital. This is plus and this is minus as a scheme of internal reconstruction. And balance point number C is not relevant. And point D, equity shares issued for 1 lakh. So there is an increase in equity share capital by 1 lakh rupees. And in nowhere there is a point related to equity share capital. So the final answer will be 5 lakhs minus 2 lakhs plus 1,50,000 plus 1 lakh. The answer is 5,50,000 equity share capital. So 5,50,000 is the correct answer. And coming to the last MCQ, fixed asset held for sale will be classified in the balance sheet as per Schedule 3. It is not a deferred tax asset because there is no accounting profit, taxable profit, and it is not a non-current asset. If it is held for sale, company intention is to sell as early as possible. So it is non-current asset, and it is not an investment also, because investment is something which is held by the entity to earn an income by way of rent, dividend, interest, etc. The only option is current asset. Okay, so these are the MCQs for September 24 attempt done. So thank you all, thanks for your patience.